Investors and traders, welcome to the channel. Market chart pattern. Today is 14th of April 2024. I hope everyone is having a great weekend. In this video segment, we are going to take a look at the financial sector for the United States market. We'll start by taking a look at the KRE, which is the regional banking ETF. It contains the smaller banks. And then we'll take a look at the XLF, which is the ETF for the financials, which includes the bigger banks as well. And then we'll take a look at the key US bigger bulge bracket banks as well, and how this sector is performing. So this video is for educational purposes only, and it's not a financial advice. So we'll begin by taking a look at the weekly chart. This is the S&P 500 KRE ETF weekly chart. Last time when we were looking at this, when we did the video, we were looking at this trend line here, and we were basically evaluating two possibilities. So this trend line is still in play, it's still in action, and any rally attempts have been capped here by this trend line thus far. And what is really important is we were also watching for a potential ABCD one-to-one price projection, which in fact points to about $62 per share for this index. And for that, one of the key things is that this low, which is around $46, it must hold on closing basis. That's about 50% retracement, but that's also our point C reference. If it is broken down to the downside, then we'll be looking at a different structure, which we will shortly look at on the daily chart. So this, what we have seen is a fair amount of selling pressure come into this market over the course of last couple of weeks, and especially last week is now challenging these lows of the week of 5th of February 2024. So really important that it actually holds around here. If it doesn't, then what we are potentially looking at is a scenario like this is the daily chart now, in which we could have a potential ABCD one price projection to the downside. Now there are two one-to-one price projections that we can take a look at. One is the smaller one, which is this one. So let me actually draw it like this, and if we were to copy this and project it like this, it will take us somewhere around $43, and we have the 61.8% retracement of this swing low to high coming in around 44. So this region of 44 to 43 is pretty key for this one. The other one is this bigger one, which could in fact see the price move lower to around 44 to even $41 per share level, where we have the bigger one-to-one price projection ABCD being completed, and also a support coming in from the 78.6% retracement of these lows to high there, and I believe there is also support just around there from the 61.8% retracement from these lows back in May of 2023, when the Federal Reserve came out with their plan for the rescue of the banks. And they injected fair amount of liquidity in the marketplace. So this is what we are watching. It does look like that because of this trend line on the daily chart being broken like this, that we might in fact be in this one-to-one price projection to the downside with $43 and $41 on the watch. And then what we'll have is we'll have another trend line. Let me actually delete this one and try to extend this, which we already have here. So we'll have another trend line here, which will be really critical, because it means that we'll have a sequence of higher bottoms, which is really good for if there's an uptrend. However, what we have also seen is this market remains under quite a lot of pressures. These are smaller banks, interest rates still are pretty high. So it will be really important to watch this $41 per share level. If it's broken, this trend line is broken to the downside, then the retest of these lows around 34 will be probably in play, in my opinion. Now let's take a look at the XLF. So this is the Spider ETF for the financial sector. Here I'm just going to go back to the weekly chart. So this is the weekly chart. This is the one that we have been watching, and you can see that double top with a question mark written here, because it's gone and tested this high of 10th of January 2022. That's when we actually began a bear market in one of and a number of key US stock indices. And here we have had this structure ABCD, and we have been watching that. When it was broken, we had the next key level around $39 per share level, and we also had a target as high as 41.21, which is the 1.618 expansion of this BC swing. So the market made an attempt to take these highs out, and what typically happens in a breakout is that most of the breakouts in fact failed. So this is what we are seeing, that this breakout had in fact actually failed with 2 consecutive negative bars, and now the market is coming back, and in my opinion, it's going to go and test this 39 level because we have the 20-week moving average. From a momentum perspective, it's strong momentum because we have the 20-week moving average above the 200-week moving average. So it's pretty strong. Now, if we were to just take a retracement level, and here we go from this low, and let me draw in the 38.2%. That's $38. Then we'll take another low, which is this one, and draw here. So 37. So I'm looking for a confluence level because that is really key that we are really looking for. And here, and let's see if there is a level where a number of these are coming together. So I don't find a very clear answer to the question that I was trying to ask myself, but it does look like around this $37 per share level, which is also the structural high from the swing point B, could be a potential target. So I am actually going to delete this one, just clean it up a little bit. So I'll just delete these for now, and here we go. So we'll have a link drawn like this. So around $37 could be a target right at the structural highs, and also a breaking point from the 16th of January 2024. So again, watching this one really carefully, but it does look like with this kind of a price action, there might be something more to follow. And this 20-week moving average on 39 is probably the next target for this one. So we'll just keep on watching because of this double top formation. Really key to keep on watching this this index. So this is what the XLF is telling us. Let's also take a quick look on the daily chart as well. So here we go. This is the daily chart. Here we can see the price action where we are having quite a severe breakdown in the price structure after testing these highs around here. Let's quickly draw a Fibonacci retracement, and I think the 38.2% will come around the $38. So not a very clear, I don't have any clear other patterns around here, so we'll have to wait and watch for something to develop, and then we'll have a much clearer target. But it looks like the price does want to target to the downside. Now let's actually take a look at JP Morgan. So the JP Morgan stock was in the news recently because of CEO Jamie Dimon also making some remarks with regards to inflation, wars, etc. And what we have seen is a pretty big decline in the price over the course of last week for JP Morgan. But what is not surprising to us is that it actually comes from a point where we were expecting a pullback around the $200 per share level, and the reason is that we had this big ABCD one-to-one price projection completing around 196. We had around 192 the 1.272 expansion of the BC swing. So we were expecting the price to have some sort of a pullback, at least coming in this ballpark figure between 190 and $200 per share level, because that's the psychological level. But we're still within the 1.618 and 1.272 expansion. So not very surprising, because we did have these levels forecasted way in advance. And now what we are watching for is what this retracement could be like. So $175, which is around the 38.2% retracement also. The 20-week moving average looks like this is where the stock might end up going to, and then we'll have to wait and see what the price action will give us more. The other thing is that in this leg higher, this is the biggest retracement that we have seen. It is definitely much bigger than this one. So if we were to take a look at this and see how much this retracement could go, so $175 per share level is where we are getting. So we'll have a confluence of two things coming together. So which gives us more information, and that to watch this level really carefully. It does have possibility that it could do a ABCD structure down, maybe as low as 160, which is going to be structural high around here. That's going to be a pretty normal retracement in a bull structure like this, because we have completed a fairly big cycle. So some sort of a pullback like this would be expected. So one of the things that I really want to point out is just going back and showing you this from 2009, how well the stock has done. So this trend line is still intact, so it still remains a bull market for JP Morgan, and it's quite normal to have pullbacks in a bull market, although the magnitude of this one is pretty severe, because of course it's coming from an elevated level as well. So we'll wait and see. If we begin to see a price action like this one, the kind of price action which we see in BC swing, that's more of a bear market scenario, because what we can see is that there's a lot of overlap, and then we have the market trying to take out a previous swing high, but sellers come in and they just sell it down. That sort of is price action is more attributed towards bear markets. Here it's just the beginning, don't really see that. Looks like more like a pullback in my opinion. So this is what we are watching for JP Morgan. Let's take a look at Goldman Sachs. Okay, here we go. So Goldman Sachs also had a big pullback. Not very surprising, because it's coming from pretty much from a double top formation as well, although it did not make an attempt to take out the highs of the 1st of November 2021. So this still remains a recovery high. We had been watching for this $395 per share for a long time, because that's where we had the 78.6% retracement, and the market just went sideways for a long time, and it broke out, and now it's just pulling back into this range. So we'll have to wait and see what this action is going to unfold for us, because if it's able to take out these highs, then we have an expansion of this one. We will also have an ABCD, which would point to much higher prices, but it could also mean that all this rally was a recovery high, and it's not able to take out the old highs coming in from 1st of November 2021, and we could have a further pullback. Now I think the first test is really coming up really soon, next week, as the market really approaches 20-week moving average. If it begins to break below that, then of course the next level we'll be watching is the 370, which is the 38.2% retracement. Moving below that, in my opinion, will be an indication that we could see probably some sort of a correction, which could take form of a 1-to-1 price projection ABCD, and the market could come fairly low towards the middle of the range, to maybe even testing the bottom of the range as well. That remains as a possibility for the stock, but we will have to take one thing at a time. With that, let's take a look at Bank of America. So here we go. So this is the Bank of America weekly chart. It's one of our favorite banking stocks, because we have done a long-term a video for the long-term cycles that are operating in this stock. So fairly bullish for this stock, but nothing goes up in a straight line, and what this stock is doing is it's just stuck in a trading range, a fairly large trading range, and it's just testing these tops from the 7th of November 2022, and we had expected this bottom to come in around $25, which it did because of this pattern formation. And here what we are watching for is there is a possibility that we could in fact be looking at this kind of ABCD, to the upside, and all of this could be a pullback right into certain key areas, for example, right to the $34 per share level, and then it could break out. So really watching this double top formation around here. Really bullish formations as well, in the sense that look at this trend line from 2011. It's just really been a really spectacular higher lows. So this low around here of 23rd of October 2023 is really key. As long as that is not broken to the downside, the stock has pretty good upside in my opinion, and at some point, I don't know exactly when, most likely it's going to go and form another high, new all-time high for the stock. So this is what we are watching. I would encourage you to find the video where we have done really long-term cycle analysis, and it'll make a lot of things really clear for you, that what are the kind of cycles that are operating in the stock and what could be expected of this. So a nice stock in my opinion. Let's take a look at Morgan Stanley. Okay, so Morgan Stanley just stuck in a range, went again double topping around here, right? This 78.6% retracement. Just watching this pennant formation here, not much to do in this stock. Then let's take a look at Citigroup. There we go. So this Citigroup, if you just look at the price action in this, it's just double top around here. Other banks such as JPMorgan, Goldman Sachs, they were able to make new highs. This hasn't really done anything, and there are a lot of in the news. There's a lot of restructuring, etc., going on. So in my opinion, the key is right here, right now. If it's able to go above $65 per share level, then maybe the stock has more strength, and maybe it will go and test the top of the range one more time. But looks like the stock might find pretty good resistance from right around here, and could move back right into this trading range towards the middle of the range, even possibly to the bottom of the range. We'll have to wait and see. But you can just look at the chart, and there has surely been some rally, because they are taking a lot of actions to shore up their structure. There's a lot of redundancies and stuff like that. A big amount of restructure going on. It's all in the news. You can just Google about it, and maybe because of that cost saving structure, we could see some bullish action coming in around here. But again, it's right at 61.8% retracement. Wells Fargo, last but not the least. So this one has been really interesting, and it's just gone exactly where we were thinking it would go, because we have this ABCD price projection coming right around here. So we had this box identified in advance where the price was likely to go, and this is what the price has done. Now the important thing is, we were also watching this high to high cycle, and then this cycle is also coming around where we are right now, and we have seen the market just go sideways. So there's a possibility it could in fact just be a topping formation around here, and we could see a pullback maybe to the 20-week moving average around $51 per share level, or maybe possibly even below that, if this was some sort of a cycle high that came in this stock, because this stock, like Citigroup, has not been able to make a new high since 2018, and all of this has been just recovery highs. There have been some fantastic rallies for sure, but it really needs to get above this hurdle around here to be able to make a stab at and make a new all-time high. So this is what we are watching in the key US financial stocks and ETFs. So thank you very much for watching the video. Wish you good luck and good trading, and speak soon.